MACD, but very few actually know how to use them correctly. In the next few minutes, you will be learning what RSI and MACD really are, how they work, and how you can use them to identify strong buying and selling opportunities in the market. By the end of this video, you'll be able to read both indicators with confidence. So, starting off with what are indicators? First thing, indicators are mathematical calculations based on price and volume. So indicators calculate based on price and volume. And the next thing about indicators are MACD and RSI are two of the most powerful confirmation tools, and these both are indicators. You can just apply an indicator by going into TradingView. After you get into TradingView, you can just hop onto indicator section and add both of these, RSI and MACD. Now both of these work differently. First thing, what is MACD? Full form, moving average convergence divergence. It's like two different, as soon as you apply this indicator, you'll find your chart moving upwards, and you'll find these two lines in this pattern on the lower part of your chart. Now what are these two lines exactly? Now this will open after you place the MACD indicator. In this you'll find two lines. First one is the MACD line, second one is the signal line. The MACD line is this lower one. Now how traders generally use this indicator to make money is, once you see this MACD line crossing over the RSI line, then this point acts as a good buying signal. And when this MACD line crosses down of the RSI, this point acts as a good sell signal. That is how traders generally use. Now in buy signal, let's see how they use it in buy signal more clearly. Now this will be your chart and this will be your MACD. You see the MACD is crossing over from down to up, and this creates a good buy zone. Now you understand that your bias in today's day should be a long side bias, and you should look for longs here. Now MACD line crosses above the signal line. This is called a good buy signal. Now how do you use MACD sell signal? Now you look at a price chart here, and here if MACD line crosses below the signal line, when the MACD line crosses below the signal line, that starts acting as a, like, look here, this was the MACD line and started crossing below. So this started acting at a good sell zone. So your bias for this day should be a very strong selling bias. And the next thing, what is MACD above zero mean? So in MACD, you would generally have, when the MACD line is zero line, the trend is bullish. So in MACD, this is how it shows the graph. This is zero. If the MACD line is above zero, you should be looking for longs, and it shows that the markets are in very good trend. This helps to identify trend more easily. And now if MACD lies below zero, now you look at here, this is zero, and MACD is below zero, then this means that the market trend, overall trend is bearish, and you should be looking for sells. Now what does MACD histogram mean? MACD histogram is like this one. Let me show you the MACD histogram. Yeah, this histogram pattern which you see, what is the use of this histogram pattern? Now this histogram pattern shows strength and momentum. Growing bars is more momentum, shrinking bars is momentum fading away. Wait for reversal and watch for reversals. When you look at here, the buying side histogram, the buying side pressure is increasing. Again it starts weakening. That is a good sign. After it weakens, that you'll have a good selling pressure. So MACD and RSI, both of these indicators are generally very good indicators to identify trends. Now what is bullish MACD divergence? Now imagine if you open your chart and you see that the price is moving in the bearish trend, but MACD is moving in upward direction. This is a sign of bullish MACD divergence. Bullish because the MACD is moving in the upward direction. Now what does this indicate? This indicates that the price market, even though currently it is moving in a bearish trend, in future it has full scope that it can start moving in the upward direction. Now what is bearish MACD divergence? When you look at bearish MACD divergence, now you look at the price chart. It's making continuous higher highs and higher lows, and it is a good bullish trend here, and market is going downwards. Now this is called as bearish MACD divergence, and this creates a sign that MACD is going downwards and market is going upwards. This gives a good sign that markets are going to reverse and start following the direction of MACD. Same here, markets are going to reverse and start following the divergence of the direction of MACD. Now these are two different types of divergence. Next, we'll start about what is RSI. RSI is an indicator which gives a signal whether the stock or the currency pair or whatever is overbought or oversold. Now, the full form of RSI generally stands for Relative Strength Index. Now, when you open the RSI indicator, you find a column like this, 0 to 100. And similarly in this way also 0 to 100. Now, what does this stand for? If you see market come below this 30 line, that means that if market comes below the 30 line, that means that the stock or whatever it is oversold. And when it goes above the 70 line, this is the 70 line, okay, and this is the 30 line. If it goes below the 30 line, that means that the market is oversold, too many people are selling. And when it goes above this, it means that the market is overbought. And when it is in this range, it is neutral, so not many people are buying or selling. But if you consider the 50 line here, if you consider a 50 line where you see the markets, one second, if you consider this line as a 50 price amount line, whenever the markets are above it, your bias should be bullish. Whenever the markets are below this, your bias should be bearish. Now this is how you use RSI to buy or sell. Now this is a clear chart where to understand it's overbought, oversold or neutral. This zone, this is a 30, this is a 30, and similar way this is a 70. Now if markets is above 70, it is overbought zone, and when it goes below 30, it is oversold zone, but in middle it is a neutral zone. And here also, if it is above 50, your bias should be bullish, and when it is below 50, your bias should be bearish. Now RSI oversold, how do you use this as your strategy? Whenever the RSI is oversold or whenever RSI drops below 30, next thing, it is a good buy opportunity. Like when you look at this, the price was going down, and you look at the RSI, it went below 30. So when it comes back to the 30 line, it is a good signal for you to go long. You can take 1:2 or 1:3 risk reward according to your risk management plan, and then go up according to your RSI. You can get easy longs. Next, when RSI is overbought, that means when it goes above 70 and again comes back to the 70 line, this is the point where you can sell. So you can start putting your stop loss above and aiming for 1:2 to 1:3 risk reward according to your risk management again. So this is how traders generally trade based on RSI. Now what is RSI 50 level? Now 50 level, if RSI is above 50 level, bulls are in control. You look for longs. And if RSI is less than 50, bears are in control and you look for shorts. Now if you look here, this is a bullish zone. Your bias should be bullish here. Again, below 50, it should be bearish. And again, if it comes below 30, oversold. Above 70, overbought. So in middle we are talking, if it is below 50, you should look for sells. Above 50, you should look for buys. Now similar way, like MACD divergence you have seen. Now what is RSI divergence? Now let's imagine, price is coming downwards in a bearish trend, but you look at the RSI, it's going upwards. Now this is what is called as the RSI divergence. Price and the RSI moving in two opposite directions. Now how to use this as a strategy? The price follows the RSI. If RSI is going in upward direction, this is a good sign that even though this is in downside direction, it is a good sign of a reversal. Now RSI bearish divergence. Now RSI is going downwards and price is moving in an upward trend. Now again, this is RSI divergence because the price and RSI both are in opposite directions. Here you can majorly look for this price to follow RSI. Now, even though it is going in an upward trend, buyers are still weak because RSI is in the downward trend. Now, best RSI buy setups are generally formed when RSI goes below 30 and price is the major support zone. And you can even use some bullish candlestick patterns. I already uploaded a video on how confirmation patterns, confirmation candlesticks are. You can check that video out. Now, best sell setups in RSI are formed when RSI goes above 70 or when it is overbought. And you can pair it with some resistance or some, confirmation candles, and with your risk management 1:2 or 1:3 to form perfect setup. Now, few traders generally combine both MACD and RSI. Now, the best setups are generally formed combining both. Now, first we'll look at RSI. RSI went below 30 and came back to this line. This is perfect setup. And in the same way, MACD also, the MACD also crosses the line, signal line. So here also is a perfect buy setup. When both indicators give a very good buy setup, the chances of you winning the trade increase more. So this is a perfect A++ setup. Common mistakes which beginner make are trading every single crossover. Sometimes when markets are choppy, you continuously get many crossovers. So you should generally avoid trading these crossovers and make sure to put a stop loss. Without stop loss, your entire plan can go into waste. You can end up losing your entire capital. Next, using indicators without price action. Only based on indicator trading is not bad. Pair it up with some support and resistance, or pair it up with some confirmation candles. Next, ignoring support and level resistance. Don't ignore this. And ignoring overall trend. Don't fight the trend. Always trade with trend. Never go in the opposite direction of trend. It is a very good sign. Now, final cheat sheet. You can take a screenshot of this if you want. It is a very important sheet, because it clearly says if MACD crosses above signal line, buy. MACD crosses below signal line, sell. RSI below 30 and it gives a reversal, buy. RSI above 70 and gives a reversal, sell. Now, best setups is RSI is oversold and MACD gives a bullish crossover. And this was it for the video. If you have any sorts of doubt, you can ask me in the comment section, or you can message me on my Instagram. Link is in the description, and let me know any other interesting videos if you want. Thank you. Happy trading.